Hosted in conjunction with Chris Media, the CEO interview series allows investors to hear directly from the CEOs leading the companies featured on Wholesale Investor. Enjoy the interview and reach out via the details in the description.
Hi and welcome to another Crisp TV Q&A. Today I'm joined by Andrew Glen, the Managing Director of Aviator Capital. Thank you for joining me, Andrew.
Thanks for having me, Sydney.
Andrew, just to get started, and for the audience out there who perhaps haven't heard of you, just a quick brief on who you are and the focus of your funds at the moment, please.
Right. Aviator Capital started in 2009, but really we became a property syndicator in 2015, and primarily that's our main business now, is just property syndication. All of our funds are single asset, closed-end property trusts, so we identify a great asset, we secure it and we put investors into it, then we manage the debt, and then we try and value add across that fund. There's no cross securitization, they're all individual assets, and that's been well received by our investors. We manage about $250 million in commercial assets at the moment, and so we're still very boutique, and we know a lot of our investors personally.
Excellent. And I guess just for those who would perhaps want to know a bit more about the metrics with these single asset funds and these syndicate deals, what's an overview you can give us in terms of targeted returns, payouts, yields?
Sure. So all of our funds at the moment return between 8% and 12% net of all fees, and that's tax effective as well. So that's, often the fund would be, you would only pay tax on half or 2/3 of that return, and the rest is tax deferred, and then we've got capital gain on top of that. So some of our best funds have gone up by 30-40% in capital return, and also yielding 9 to 12% along the way. The lowest fund we've got, a new fund, is 8%.
Excellent. And when people are assessing where to allocate their capital, they obviously want to know what the difference between you and other potential funds out there are. So perhaps we could go into the unique methodology you guys take when you conduct your due diligence and your analysis, if that's okay.
I think it's really important that we don't generate product for the sake of having product. So we look at probably 20 assets in detail before we actually secure one. And so we make sure we make our money when we buy, not when we sell, if that makes sense. We've got to get the right asset. As investors ourselves in the fund on equal terms with the other investors, then we care about how that every fund performs and making sure we get those returns right. So we spend a lot of time on due diligence. We look for assets that we think are slightly undervalued or have upside through value add, and that's probably one of our differences, is really active asset management, where we're focusing on repositioning the building or securing better tenants or increasing the WALE of the fund, and that adds really excellent value for investors while we maintain yield along the way. And that's probably our main difference, I think. We're just that active asset management.
Absolutely. Perhaps you could give us a recount on where you've executed on that strategy, past performance, track records, just for us in the audience.
So we had a medical centre in Brisbane, and we bought it in 2017 for $33.5 million. It has a very big gym with 4,000 members. It has medical imaging doctors, physiotherapy, hearing, podiatry, a whole bunch of different medical users, and lifestyle for that matter, but predominantly medical. During COVID, they really suffered, and the gym, for example, was shut down by government mandate. So we used that opportunity to reset all of the leases of the anchor tenants. So in return for giving them a discount or abatement during the period to give them some rent relief, they all extended their lease by a further 5 years because the centre was well managed, they were being taken care of, they got their short-term rent relief that they needed. But that cost us a little bit of money, but we picked up a huge amount in valuation. And then and because of that, because we increased the WALE, we had an unsolicited offer at $51.9 million after 4 years, which we accepted, and it was yielding 9.5% along the way. So it was about an 80% return for investors in 4 years.
That's excellent. And I guess that points us to the next question, because it obviously takes a lot of experience and insight to make those sort of moves and deals. So tell us about the team behind the firm and what skills and experience they bring to the table.
Yeah, we've got a really, really good team with a diverse commercial property experience in particular. So I've been in commercial property for about 18 years. Got a real estate license as well. We have an asset management business that manages around 900 commercial tenancies. And then the other director of Aviator, Troy, he's a commercial developer by background, so we've got a lot of experience in trying to be able to understand that not only the best use for an asset if we're going to reposition it, but also how to value add if there's untapped potential there. Then we've got Mark, who's head of Cap Trans and asset management. He comes from an institutional research background, so he was an analyst at one of the large commercial agencies, and then he went across to Canada and worked at one of the large pension funds, multi-billion-dollar portfolio. So he's head of Cap Trans. We've got Lindsay, who is a stockbroker by background. So he works on our equity securities derivative side. So when we're positioning for things like that, and then we've got insurance from Ian, and Vanessa as client relationship management. So that's the main team. That covers the entire range of internal requirements. We outsource our debt and accounting and audit and legal. So we've got really experienced teams on that, but they're not in-house because we really need that expertise. But yeah.
Absolutely. Understood. I guess this, what I think would be great for the audience just from an educational standpoint is perhaps a 6 to 12 month outlook on the markets you operate in now, what you're seeing, what you're expecting, the potential for deals on the horizon. Perhaps you could give us a bit of education at this point. Yeah, absolutely.
It's a very interesting market at the moment. Obviously, commercial property is sensitive to interest rates, and there's a lot of talk about inflation. Where a lot of transactions were being held back because of COVID up until Christmas just passed. There's a lot more volume of transactions coming on the market, but we're also seeing prices come down a little bit, which is a great opportunity. So we've got a lot of pent-up investor demand, and this will give us an opportunity to buy at better pricing. Okay, so the concern from investors is what about interest rates? And the great thing about commercial property is it's normally considered a hedge against inflation. So a lot of the rents are pegged to CPI. So if CPI is high, then rents are going up. And if the economy is doing well, then there's more demand for office. And we're also seeing a lot of people move back to the city. So we don't believe that office is dead by any means. And of course, we've got medical and retail, and we look at large format retail and industrial and various other assets as well. So yeah, we're actually pretty excited about the opportunity that's coming up over the next 12 months. We've got a fund underway in Brisbane at the moment that's been tracking exceptionally well, and we've got a couple of other assets that we're looking at for the second part of this year. So there'll be some really good opportunity.
Excellent. Well, look, congratulations on the success to date and the past performance, and best of luck for the next 6 to 12 months and into the near future. And for anybody who does want to reach out to the firm, Aviator Capital, we will have their details on the screen to reach out, as well as their deal room link for you to request access. And I'm sure you'd be happy to have a chat and go from there. Yeah,
absolutely. Thanks, Sydney. We have really close relationships with a lot of our investors. They pick up the phone and they ring people within the team and ask questions directly. We often meet with them and give them personal presentations on upcoming opportunities, and then we have an excellent level of communication. So they're always kept informed about the asset that they have exposure to. So they know the bricks and mortar that they've invested in, and they're part of that process as well, because we keep them informed about what's going on and where the value add is being achieved and what's happening with tenants, and so that really goes well for us. All of our investors are repeat investors. In fact, a lot of them invest in every single fund and ring me and say, when's the next fund? So we don't, as I said before, we don't generate product for the sake of it, but when we have an opportunity, it goes pretty quickly.
Excellent. Well, it sounds like you've made it a very comfortable process for the investors as well, which is very important. And again, thank you so much for joining me today.
Thanks for having me. Appreciate it.